Yo, 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 what's up, everybody? It is Thursday, June 10th. Hey, if you have time, I want you to go back and watch my video. I believe it was April 28th. I think that's the date. Go back. It says, the title of the video says, Investors are about to learn a lesson. It was when I was out in California. I made that video. And in the video, I talked about how all these people who had these expectations of interest rates going up, you know, the Fed's just going to have to raise interest rates, inflation. I kept saying, look, the monopolist, which is the Fed, if it is telling you it is not going to raise prices, in other words, it's not going to raise rates, you have to listen to the monopolist. And I said, because that's the power of a monopolist. They have price setting power. Nobody else has price setting power other than the monopolist, at least in this type of a situation where we're talking about interest rates. Okay? And I said, a lot of these people, most of these people, all of them actually, they're going to learn a lesson. And that was back when I made that video. The 10-year benchmark treasury yield was at like 1.65%. It is now down to 1.43%. And what's interesting is that today we had a pretty strong CPI number. And the initial reaction was investors sold bonds. And if you listened to my video yesterday, I told you, I said, that's going to be the reaction. And you have to go against it. You have to buy the bonds on that dip. And that's exactly what happened. The bonds went down, you know, knee-jerk, zombie selling. Oh, it was a 0.6 print in the CPI. And then we just went straight up and the yield came straight down. We're at 143 right now. And what's funny is that I'm starting to see headlines pop up. People are saying, oh, you know, I guess the Fed is not going to raise interest rates after all. I guess they were sticking to their inflation is transitory story. Yes, they were sticking to that. They were telling you that. So I just find this fascinating because since April 28th, I've done several videos where I talked about how, you know, all of Wall Street, all of the financial community, for so long, the one thing they always kept repeating to us over and over and over again was, don't fight the Fed, don't fight the Fed. That was like, you know, the number one mantra on Wall Street. Don't fight the Fed, don't fight the Fed. And yet, in the past, 4 months, they've all been fighting the Fed. Like I see posts on Twitter by this guy, Mohammed El-Arian. He's on CNBC all the time. I mean, he's practically crying. He's whining. They drag him on that show every single day. I feel sorry for the guy because he looks like a complete fool. Every single day, like screaming, oh, the Fed, they have to raise interest rates. They have to raise. No, they don't. Another guy who was on this morning, I believe, was one of our favorite guys, Stanley Drunken Miller, who was also like whining and crying, saying the Fed is canceling out market signals. And by that he meant, that the market is trying to tell everybody, rates have to go up. And the Fed is canceling out those signals. Like, you could just feel the frustration in this guy's statement. You could, it was palpable. You could feel his frustration. He's probably short treasuries. He's probably covering his shorts right now. That's what's squeezing the bonds up and putting the yields down. I think I said in one of my videos even that 1.45% on the 10-year, that was an important stop loss point. Like, you have a big short position in this market held by small speculators. All right? And that's going to get unwound. But Stanley Drunken Miller today was like, he was beside himself, talking about how the Fed was canceling market signals. Well, that's what the monopolist can do. I mean, that's the power of the monopolist. I mean, how many times do I have to repeat? They tell you what they're going to do. And our job is just to sit around and wait for them to tell us what they're going to do. And then, we can strategize off of that. Now, I'm not here gloating about it, all right? I'm here to inform and educate and show you things. And I said, like Powell kept saying, we're not going to raise interest rates. We're not going to raise interest rates. We're not going to raise interest rates. They were that's the monopolist. Don't fight the Fed. That phrase, that understanding, it never went away. It's just that, lots and lots of people, many of whom are considered these like really serious people on Wall Street. I'm not talking about the quacks and the kooks who've been saying this forever. You got to have higher interest rates. Our interest rates are artificially low. No, I've been all over this. Like a 0% interest rate is the natural rate of interest. Anyway, all of these serious people for months and months and months who for years have been repeating over and over again, don't fight the Fed. They were just throwing that away. They were throwing that line away. And it was all about fighting the Fed. Then, man, this was one of the easiest trades. And I've been here telling you guys about this the whole entire time. This was one of the easiest trades I ever did. All right? Now, let me just say this. Next week, we have a Fed meeting. Everybody now is buying into this, they're not going to raise interest rates. They're finally starting to acquiesce, to come around to this view like, hey, we better not fight the Fed. Finally. But it still is all about the Fed and what they intend to do. And I don't have any inside information on that. I kept telling you here that if the Fed came out and said, okay, we're thinking now about raising interest rates, I'd be the first one to tell you time to short the bond market. But since they never said that, I kept saying you got to be long bonds. I don't know what they're going to say next week. They're not going to change rates. They're not going to raise rates. They're not going to cut rates. That we know for sure. But I don't know. They might come out with a statement saying, we think we're going to start to taper pretty soon. That's not a rate hike, but that might be an indication of where their head is at. It also might be, something they're thinking about with respect to what's going on with, these reverse repos that they've been having to do to drain cash out of the banking system because the banks are loaded up with reserves and, it's just hindering them. But if they make some kind of a statement next week like, hey, you know what? We're thinking now about maybe raising interest rates, not now, but later on in the year, that would be something, okay? I'm not going to sit here and say, hey, you got to stay in this position. Right now, there's nothing out there saying you got to change this position. But if the monopolist comes along again next week and says, we're thinking about changing our mind, that would be something. But I'll deal with that if and when that comes. Right now, this whole video, what I wanted to tell you guys is what I've been trying to make this point over and over again. The people with their hands on the levers and the buttons, look, this is all about policy. One guy on here made a comment to me saying, Mike, you're really good about MMT and this and that, but you don't understand the big picture. I do understand the big picture, but at the same time, I will say this. It's all driven by events, and events can change. It's all policy, and policy can change, in an instant. Hang on. So, I'm also understanding of that reality. Like, it's not about a line on a chart. You know, the people at the controls who have their hands on the buttons and the levers, the policymakers, that's Congress, that's the fiscal, that's the price setter, the monopolist, the Fed. They tell you what they're going to do. Okay? Now, one final thing, which I've been talking about, is the benefit cuts starting on June 12th. 4 states on June 12th, 8 states on June 16th, okay, and 9 states on June 26th. Right now, I will tell you this, that the fiscal flows are very strong. If these benefit cuts weren't happening, right now I'd be pounding the table telling you the market's going higher, a lot higher. And it may still very well do that. I mean, these initial benefits cuts that happened, you know, the first 4 states, and I forget which ones they are. They're small states. It's like, well, small population. Alaska, Missouri, Iowa, I think. I don't know what the 4th one is. Anyway, those cuts might be, you know, not have a big impact. The flows are picking up, and that's bullish. And if it wasn't for these cuts, you know, I'd be telling you right now that this thing's going a lot higher, especially with rates coming down and this fear. And let me just say one more thing about rates. With all the reserves piling into the banking system, I mean, we could see rates go down to 0, even on a 10-year. We could see short-term rates go negative. I mean, we have seen that kind of dip in and out from time to time. So don't think it can't happen. I mean, you have that in Europe, you have that in Japan. And if the Fed doesn't do anything, if they say, hey, we're sticking the way it is, I mean, rates are going lower. They're going lower. All right? So anyway, I just want to bring that to your attention. Remember, try to check it out. April 28th, the video that I made. And you'll see what I'm talking about. See you tomorrow. Bye.